All right, good evening. We're going to get the webinar started. So good evening. Welcome to this evening's webinar. Title tonight is Why the Melbourne Property Market is Heading for a Boom Period. Just come back from a couple of weeks there with doing our market research with Dan Reynolds, who we'll meet shortly. And very excited about what's happening in the market there. And very excited tonight to have a great panel, 4 guest speakers this evening. So I just wanted to welcome them. I would like to welcome, first of all, I'm just going to get them to unmute themselves. Want to welcome, good evening to Dana. Dana, whereabouts are you based and
Hi,
what's
everyone.
been happening the last couple of days?
I'm based in Perth. We've been super busy, just researching lots of different amazing property opportunities all over the country, and finishing off a property that I'm about to rent this weekend.
Fantastic. Great to have you on board. I'm going to go to Tony next, if Tony just unmutes himself. Tony, whereabouts are you based and what's been happening your last couple of days, mate? You're a property and building expert. So, yeah, tell us a bit about yourself.
Hi, guys. So I'm based in Melbourne. So been always in Melbourne. And for the past couple of weeks, just super busy. We definitely feel there's a big coming back in Melbourne. So but I'll probably give you guys a bit more information later. But what I can feel in general is that definitely much more inquiry in Melbourne since about 6 months ago. That's one of the reasons we've been super, super busy.
Fantastic. Well, looking forward to hearing more. And also want to introduce you to our 4th guest speaker, Mark Lim, who I'll give him a proper intro a bit later, but he's the expert in property management and on the rental side. So good evening, Mark. Whereabouts are you based?
Good evening, Garth. Thanks for having me here. Now, everyone, I'm based in Melbourne. So we are a property management business here. And in fact, when Garth was here, it was lovely to meet Garth and Dana just a couple of weeks ago. We're excited to work together.
No, well, that's fantastic, guys. So thank you. If I can just get you on mute, and we will be with you guys as shortly as we can. So yeah, we'll get the webinar started. My name is Garth Davis. I'm the founder and CEO of Property Powerhouse, the experts in investment property. And tonight's webinar, we're trying to keep that short and sweet to an hour. As normal, we just want to bring education and information to you. There won't be any sales pitching tonight, but just some really good information. And I'm going to take you through a couple of slides here. So let's just see if she wants to behave and move to the next slide for us. There we go. Beautiful. Okay. So there we go with just a disclaimer that information here will be general in nature and not specific to your own needs. So speak to your accountant, speak to your financial planner, speak to your finance broker. Tonight's information just general. All right, here we go. What does Property Powerhouse do? Well, as you can see here, our mission statement, we provide education, we provide support, we bring experience to the table, and we help mum and dad investors to buy investment properties right across Australia, enabling them to retire wealthy and happy, ensuring them a financially free lifestyle in retirement. Why use Property Powerhouse? Well, first of all, our point of difference is we have that Australia-wide footprint, which makes us a one-stop shop across the country. We're researching in all the markets, got a finger on the pulse in all the capital cities around the country. We work at no cost to you. That's correct. No cost to you ever as the buyer. All right. So what will happen is if you eventually settle on a property, it'll always settle on bank valuation. We never had one property value settle below bank valuation in the 7.5 years of our business. So the research is spot on, making sure the prices are right, fair market price or better before we present them to you. And we never charge you a fee. And our prices, any property we present to you will be a fixed price. It's not like you go into the suburbs and you've got to make an offer and someone offers more than you and you've got a counter offer and backwards and forwards. We negotiate the very, very cheapest price that a vendor will be prepared to let that property go. So we present a fixed price contract. So that gives you certainty and that you know that things are not, the goalposts are not moving. Every property will come what we call fully turnkey also, comes with landscaping, comes with inclusions inside, washing line, post box. So you can look at your costings and do that with some confidence, knowing also what all the outgoings are, the rents coming in, etc. And we give you excellent long-term support and assistance for as long as you own the property. Normal real estate agent would hand you the keys and say, George, good luck, phone me when you want to sell it. And that's the last thing we do is we don't operate like that. We offer the long-term support for as long as you own the property. Right, let's move to the next slide. A bit of a market update. I'm just going to move that out my way so I can see it properly. So hopefully you can all see the screen. This comes out by CoreLogic on the first day of every month. And this was for the data. It came out on the 1st of November for the October. Now, for some of you regulars that have been on our webinars over the years, you know, I normally would like to highlight the areas that are going really strong. And we can have a look at that at the moment. So on the left-hand side, we've got the capital cities, the monthly change, quarterly change, and annual change. Please note this is dwelling. So this is houses, townhouses, and villas and apartments. All right, so it's right across the board. And what interests us here today, I want you just to have a look at the annual, and we can see the median prices on the right. So those of us have known that anyone who's invested in Perth or lives in Perth knows that the market has been performing fantastic. All right, 22% over this last year. Brisbane and Adelaide, you can see Adelaide 15%, Brisbane 13%. It's kind of been a tale of two property markets, where you've had Perth, Adelaide, and Brisbane performing really well, and the balance not performing really well at all. That's normal. Properties work in cycles, and they work in counter cycles. It's normally always the case. Perth, Adelaide, and Brisbane operate in a completely different cycle to particularly Melbourne and Sydney. So when Melbourne and Sydney are going strong, Brisbane, Adelaide, Perth markets are very flat and not much activity, and likewise the other way around. What I did want to bring to your attention, though, and tonight's webinar is about Melbourne. Now, this is also a buying signal. The market is underperforming. You can see for the year, it's actually lost nearly 2%. And this is what we call, and you'll see a clock later on, and Dana's going to show you, but basically if you can imagine, 6 o'clock is at like the bottom of a market where there's lots of sellers, no buyers, and 12 o'clock is where the market is really, really hot. So, Melbourne is coming out of that market now, probably just moved a tick over 6 o'clock, and it's offering fantastic opportunities because it's been soft for so long. Now, on the right-hand side, I hope you can see the extreme right. There's some red numbers there. I've tried to put that in order. My maths, I hope, is okay for this exercise. Listing them in order of median value, sort of from the most expensive down. So Sydney is first, then we can see Brisbane has the next expensive median value. Then we go down to Canberra, then we're 4, Adelaide, Perth 5, and Melbourne number 6. Now, to anyone that's been following property for the last 15, 20 years, know straight away something is wrong there. That is actually brings a flag and it brings to your attention. Melbourne is normally number 2 on this list, all right? And it is number 6 now. So it is offering fantastic opportunity. It's way out of where it should be. It's out of kilter, which is a buying signal. All right, it should be sitting at number 2 and it's sitting at number 6. And we'll hear from the others a little bit later about why that's happened and what the opportunity is there. So it should be sitting in 2, and over a normal long period of the trend lines, it will get back to number 2. So what that presents is a wonderful opportunity where a market is seriously undervalued, it hasn't performed, and the market is already starting to perform now. When we hear from Tony and Mark, we'll hear that there's already some movement in the market. Often the data takes a little while. So you can see even last month it was a little bit down, but sales data normally takes 3 months to come through the system. And what we'll probably find in 3 to 4 months' time, this table will start to show that Melbourne has turned the corner, and we right in the early stages of that change. So yeah, sitting at number 6, and it should be number 2. That's a buying signal for us. So also from a rental perspective, what's happening there in Melbourne, the state of Victoria is really cash poor after a very long COVID period where they had a lot of industries, business, etc., closed up, and they're running at a bad shortfall. The government are trying to look at all opportunities to raise funds and to raise money, and they've seen property investors as an easy target. They've dropped the threshold of land tax, which means land tax has gone up in the short term in Melbourne. And also the rental yields have been a bit low and there's been no growth. So there's been a lot of investors selling out. Again, that is a flag of opportunity, because this is what happened in Perth 3 years ago, is we had 22,000 people sell the investment properties in Perth. What happens next? Those properties get bought by owner occupiers and the rental pool shrinks. So what happens then? There's more people competing for less properties, rents go up and rental yields go up. So I'm not going to steal the thunder there of Mark Lim, but we'll be talking later, but we're going to see some great change in what's happening with rents, and already investors are coming back into the market, even though there's been a lot of people exiting the market. We see that there's great opportunity where people are leaving a market. It has to balance out, and there will be a counter measure where it creates massive opportunity for investors. Let's have a quick look at interest rates. So normal investor loan, interest only, which is what most investors would take while they're accumulating. We can see the variable rate 6.54, the fixed rates. So fixed rates, not necessarily attractive. We're expecting at least 2 rate drops next year. I'm taking a educated decision guess that 1st of April Fool's Day, will be our first interest rate cut of 0.25, followed by another one probably, within a couple of months after that. So interest rates on their way down next year. It's been hard for people to hold properties because the interest rates have been a little bit higher, but hopefully some reprieve for us next year. So really important to talk to your broker, understand the numbers, and understand, just understand the numbers and the cash flow. It's really, really important before buying an investment property. All right, let's have a look. All right, that's enough from me. I'm going to take you on to our first presenter now. So I'm going to ask Dana, please, to open up her video. So introducing Dana Reynolds. She does a fantastic job for us at Property Powerhouse. She's a property researcher and stock acquisition specialist. Dana has been in the Australian property industry for over 15 years now and is an avid property investor, developer, renovator, and has real estate licensee herself with a specialization in development Australia-wide. Prior to joining Property Powerhouse, Dana was the developer's master agent for the towers at Elizabeth Quay in Perth, the beautiful Elizabeth Quay there. As the head of research at Property Powerhouse, Dana and an extensive team spend their time reviewing and assessing investment property opportunities Australia-wide, searching for top quality, low-risk opportunities for our clients. Good evening, Dana, and over to you.
Good evening. Thanks for having me on, and nice to speak with all of you tonight. We are really excited to talk about the Melbourne market to you because we, as Garth was explaining, think there's a lot of opportunity right now. So just some fast facts for you. Melbourne is Australia's second largest capital city with 19% of Australia's population. 5.207 million people. So it's a thriving metropolis, and it's growing every year by about 3.3%, or about 71,000 people. And that's been consistent over the past 2 decades. So we're seeing lots of growth, and that is a trend that's not reversing. It's actually estimated that Melbourne is going to overtake Greater Sydney as Australia's most populated city in 2031-32. It's got a highly diversified economy, different strengths in finance, manufacturing, research, IT, education, logistics, transportation, and tourism. So for those of you who haven't visited Melbourne, it's an absolutely thriving city with lots of business activity and industrial hubs, and really an excellent place to live. It's been ranked Melbourne's most livable city, Australia's most livable city many times, and one of the most walkable cities. So next slide, Garth, please. Now, as Garth was explaining, we really think now is a very interesting time to start turning our attention to Melbourne. Over the past few years, as Garth has mentioned, it's been quite a soft market, not a lot of growth since COVID. And what we're seeing is that the rate of the market decline is actually slowing now. So when Garth showed you the CoreLogic chart saying it was negative 0.2%, that actually relates to sales that were written 3 months ago. But as Tony started to mention to you, what I'm seeing on the ground as I talk to builders, land developers, townhouse developers, property managers, investors, and different individuals involved in real estate, is that the tide has really changed over the last 3 months since these sales were written. We're watching a lot of properties sell much quicker now than they used to. We're seeing properties that sat around for a while finally be taken up. And we actually are seeing a lot of investor activity move from other states around Australia back to Melbourne. So it's a really exciting time, and we can really feel the tide shifting on the ground. So I think it's great to just reiterate what Garth had said. I think in about 3 to 4 months, we'll start seeing that reflected in the numbers. What was also interesting is that Heron Todd White also pinged this month in their property clock, which you see right here. And as Garth was explaining, the peak of the market is 12 o'clock, where obviously the booming cities and suburbs are. And after the peak, then a market declines, sits on the bottom for a while, as Melbourne has, and it's finally ticked a little bit towards a rising market. So that's what we call the start of the recovery. And that is an awesome time to be entering the market, because there's a lot of stuff to choose from. So you can actually be quite picky. Whereas when there's a hot market, there's more buyers than properties available. And so you can't be quite as choosy. So now's a really interesting time, because there's more opportunity, more options to look at, more selection to make. And then you can also take advantage of that full market upswing. And just to reiterate what Garth had said, it's really quite a low medium value right now in Melbourne of 776, 044, which is the 6th cheapest in the country, less expensive than Sydney, Brisbane, Adelaide, Perth, and Canberra, which is incredible, because historically it's always sat in second place just below Sydney. Moving on to the next slide, please, Garth. So where are the best locations is what everyone wants to know for new investment property. And that's what we spend our time looking at all the time. But when we say a good investment property, that doesn't necessarily mean it's the right investment property for a specific individual, because everyone's circumstances are different, and you need to really pick a property that matches your long-term goals and your purchasing capacity and so many other things. And that's what you would speak to the sales team about if you were interested. But with my team, what we're just looking at is what is a good property. And so we're looking for top quality property in terms of being well constructed and well finished. It needs to be at the right price so that it reaches a valuation on the contract price. It needs to represent fair or better than fair market value. The locations, they all have to have thriving infrastructure, new jobs. They need to have enough economy, a local economy, to support growing rents should the rental market move upwards, and the types of tenants that can actually afford to pay those rents. It also means a property that meets the local tenant demands. So you need to know what the tenants in a certain area are looking for, and make sure that the property actually supplies that to them. And so there's a number of different things that we do. We look at the market, we look at the macro market, we look at the micro market, and then we go really deep into the locations. Where are new projects like the Merrifield Business Park in Northern Melbourne, which is Victoria's largest industrial and business park master plan ever. We look at where the train lines are growing, where the roadways are improving and the motorways are improving. Where are the schools? Where are the top schools? And we dig then deeper into the micro aspects of the location. Is it close to parks? Is it close to amenity? How do people move around? Do they use the train? Do they need the freeway? How many parking spaces do they need in a house? And then we dig into the actual property research. So making sure that the individual properties really match that overall brief of the market. Is top quality, has the right inclusions. So it has, the fence and the letterbox and the clothesline, basically turnkey. And a lot of this also comes down to having local knowledge. So that's where the benefit of all of our teams and partners come in. So moving on, we'll dig into where we're finding these good investment properties right now. So over the past couple weeks, we've been reviewing properties. A number of them we got to see when we were over in Melbourne a few weeks ago. And some of the best ones that we found in the high 400 price point, which is an amazing price point, not able to be achieved in many of our capital cities. We're finding some awesome properties with excellent yields in areas like Melbourne. Locals call it Mambo. It's right on the train line, really easy access to Melbourne, absolutely stunning infrastructure, clubhouse, which is attracting lots of interest from the locals because they have access to gyms and pools and all sorts of stuff in there. We also found some really good ones in the Northern Growth Corridor in Mickleham, Donnybrook, Wallert. So moving on to the next slide, Garth, please. We'll show you what type of properties you can expect to find in those areas. In the high 400s, we're finding a number of these two-story, they're called terrace houses. The majority of them actually have a 40 mil gap between them. So they're standalone with no strata fees, but they're set up as terrace homes. Is quite widely accepted in Melbourne. Generally, what you're finding is the ground level has a kitchen, meals area, and then another living room area. Upstairs, you'll find 2 bedrooms, another bathroom. You're seeing typical build size in the range of 110 to 130 square meters, sitting on some small lots, 80 to 100 square meters. So just shooting on, because I know we've got a lot to cover tonight. We'll skip into the 500s and where we're finding these amazing properties in the 500s. So we've got some in Point Cook, which is an awesome location, coastal, close to the city, very established. Also in Mambo, we're seeing some really good properties at that price point. Tarneet, a very old established growth corridor, really, really easy access to everything. Moving up to Sunbury, we've got some opportunities also in Beveridge in the 500 price point. And then also you're finding some in the Southeast in Clyde North. So next slide. Thanks. So in the 500 to 600 range, you're seeing a mix of some of these 2-story townhouse or terrace homes, some in, and also some single-story smaller houses on small lots. So generally you're finding land sizes of anywhere from 80 to 200 square meters and build sizes around 110 to 150 in that 500 to 600 price point. Moving on to the 600s, please. Here we're starting to really open up where we're finding these opportunities. We've seen some in Tarneet that were really good in the 600s, Thornhill Park, Deanside, also Rockbank, which isn't starred, but Fraser's Rise, in the north in the Woodstock area, and also in the southeast in Pakenham, in Cranbourne, in Mornington, also amazing coastal area. And next slide, please. So you see that now you're sort of stepping into your single family homes more so, but with a little higher quality inclusions or specs. You're still seeing land sizes around that 100 to sort of 300 square meter size and builds of about 110 to 190. So a little bit more generous, but also much more higher spec. Yep, move on, please. Thanks. And in the 700 plus range, that's kind of how long is a string, because there's so many opportunities. It really depends on your budget. But in that sort of 700-800, even up to sort of 900, you've got some amazing opportunities in Point Cook, in Maidstone, Sunshine, Oak Park, Fraser's Rise, Epping, Reservoir, Heidelberg West, and then down in the southeast in Pakenham and Officer, Cranbourne, all those really sought after areas. If you can skip down to the next slide, please. Here you're seeing a lot of inner city townhouses in those inner suburbs. They're sprouting up everywhere and they're absolutely stunning. We're also seeing some of these really gorgeous high spec houses. Next slide, please. Or is that the last? Okay, well, that's just a quick overview of some of the properties that we've been looking at. Thank you so much, everyone. Have a great night.
That's fantastic. Thanks, Dana. And guys, there should be on the bar an opportunity to for Q&A. So please type in some Q&A or else put it into the chat. We'll answer questions at the end. But thank you, Dana. That was very good. Yes, and there were a lot of opportunities. We worked really hard, drove around to a lot of areas, and very excited about the opportunities and the price points. One thing I didn't mention when I was showing that chart a bit earlier about the CoreLogic chart. They've been keeping records for 41 years. This is the first time ever that Adelaide has been more expensive than Melbourne. So again, just showing you things are really out of kilter. And again, that is a buying signal. That's saying, take notice, something's out of sync. Here's opportunity. All right. So that's really good. Thank you, Dana. Next presenter up, we're going to have Tony Tang. So Tony, if you just want to unmute yourself and get your video up for me. There he is. Tony, I'm just going to introduce you quickly. He's our Melbourne-based property and building expert. Does a great job for us on the ground there. Tony has extensive industry knowledge with a wealth of experience spanning over 15 years. He has worked with the best Victorian and national home builders, and Tony has seen the highs and the lows of the Melbourne property market. He has inspected hundreds of houses and townhouses under construction and completed ones, and always does thorough research and due diligence of building materials and inclusions in these projects. He is able to provide valuable insights from a building and inclusion perspective. So good evening, Tony, and over to you, mate.
Okay, thank you, Garth. Hi, everyone. So basically, yeah, I've been working with a number of very large builders in Victoria, and a couple of them nationwide as well. So because I always, I've been living in Melbourne for over 20 years, and I really would like to introduce you about this this city called Wyndham City. So just when Dana introduced a few suburbs in the west, you will noticed she mentioned a few one called Melbourne, Werribee, Tane, Point Cook. These ones are all part of the Wyndham City. So Wyndham City is a bayside area in the west of Melbourne. It's a fairly large area, and so the closest suburb to CBD is about 12 kilometers, and the furthest is about 45 kilometers. So it's it's quite close to the city compared to the suburbs in the southeast, and basically, this city has, since there was at the moment, I believe there's about 300,000 people living there. And pretty much since early 210, somewhere between 210 and 2016, we've seen there's a very sharp growth in population, simply because that area is quite flat, and home builders like the area to build the houses, and the owners love there because it's very close to the city. So if you can refer to the right-hand side of the chart, you will see that we're highlighted in green that during 2022 and 2023, Wyndham City has a net increase of nearly 15,000 people, right? And that's number 2 in Victoria. The first one is being Melbourne City, and of course you have so many apartments, but as a sort of suburban city, this is a very, very good performance, and that indicates how many people would like to live there, already moved in there. All right, so this is one of the strong point of this Wyndham City, and also if you refer to the bottom of the slides, this is a screenshot from Wyndham City Council, where they have forecasted that by year 2040, the population will be growing to 500,000. That's 500,000 people in that city. So it's pretty, given the current rate of growth, that's very realistic. And when you have a chance to drive down there, like Garth and Dana, you'll find out that area is very booming. A lot of people living there, young kids, young families, a lot of business. So yeah, so it's a very, put this way, it's a very entry-level price point, but very close to the city, and there's a lot of opportunities over there. All right. Next slides, please, Garth. All right. So among this, inside this Wyndham Council area, there's a couple of suburbs that is more premium than the others. One of them I would like to introduce today is the Point Cook. All right. So that's where the red arrow is. So Point Cook basically started from about 15 years ago, when you've seen big numbers of land projects getting up. And as of today, there's not much really land estate available. If you go online, you probably find one or two, might have like 5 to 10 lots left. That's it. And Point Cook is very established. And you have all the schools, shops, shopping centers, sort of everything has been, if you drive down there, you'll see a lot of established facilities. Next one, please, Garth.
Sure, mate. Just going to pop in there. It's amazing to think it's so close, only 20 kilometers from the CBD. That's awesome. Just moving to your next slide.
Yeah, no problem. Alrighty. So over here, you can see this picture basically gives you an overview of what facilities you've got in Point Cook. So on the top right corner, you will see there are 1, 2, 3, 4 train stations. Right, so that's called Werribee line. So you will see these 4 train stations that just, all you have to do is drive just outside Point Cook, and you will get to these 4 stations. And that's how close it is. And all the red dots stands for all the established childcare center. And you can see there's at least about 10 of them. Because Point Cook is, my understanding is a lot of young family living there. So age between 25 to 45 with the first or second kids with them. So that's why it's a very, the area is full of energy, full of, kids and young adults. And you can see you probably can't see that clear, but the blue dots, that's where the schools. And for the schools, this is a bit of a highlight for Point Cook, right? So on the left-hand side, the bottom one, where Gus, do you mind just move the mouse to Susan Corey? Now this one a bit up. Yeah, the one up a bit. Yeah, that one, perfect. So that school is called Susan Corey High School. Basically, this is one of the only 4 selective entry high schools in Victoria. What does it mean is, you don't need to live in the school zone or whatever, but to get in, you have to take an exam, and you have to get the, very, very high school to get in there. So getting there can almost guarantee you, a first class university entry. So this is one of the main point about Point Cook, because it's how close it is to the school. And you can see that school is also on the southern side of the highway and the train line. So our project, the project I'm going to introduce next, Saratoga, that's where the green dot is. That's basically about 5 to 10 minutes drive from there to the school. So that's a big bonus. And on just right above the Susan Corey High School, you have a campus from Melbourne University and Victoria University. So university campuses, right? And right above these two, now you have one of the biggest hospital in the West called Werribee Mercy Hospital. And a little bit to the right, you have St. Vincent Private Hospital. So you can see on this little pocket, you have 2 hospitals, 2 university campuses, 1 selective entry high schools. So basically, that's all the key resources, education, hospital resources you can find in the West are all in here. And also there's some other facilities in there, which you can probably see the parks, libraries, reserves. they're all scattered around in Point Cook area. So that give you the images straight away. This is very established areas, right? There's no, there's no new land releases, right? Everything is quite established. Next slide, please, Garth. So this one I'm going to introduce today as well is this townhouse is in Saratoga estate. So the image you've seen right now is the render image for the current release. Saratoga is the estate that is quite close to Susan Quarry and all the hospital and university campuses. It is one of the closest project to there. It's been sold out nearly, all the house land lots I'm talking about has been sold out nearly 5 to 6 years ago. All right, so for quite a long time, there's nothing available in the estate. So these lots, these townhouses, are owned by developers, them strategically holding these medium density sites and wait until, there's a strong signal for Melbourne market, and then they release them. So we have the great opportunity here. Next slides, please, Garth. So this is the master plan for the last 2 stages. So on the top, where we see the numbers, lot 1 to lot 11, that's the first release of the last townhouse project. And the one at the bottom says future release, that's called stage 2, right? So, but these 2 will be pretty much start the civil works and construction at the same time, but stage 2 will be 1 month behind of stage 1. Right next to it, you will see there's a Nino Early Learning Center. So we've been there with Garth and Dana, and they know how many kids in there, right? It's quite noisy that day. And also, right after the childcare center, that's the one of the best feature of this estate. There's a club called Saratoga Club. So Saratoga Club is put this way: in Point Cook, there's only about 3 to 4 land estates have this type of facility. Basically, this tells you that if you in Point Cook, you find an estate that have this facility, that straight away tells you this is a premium estate, because standard ones wouldn't have this. So what does this do? This club basically have a certain facilities. Basically, it's for the use of every single house owners inside the estate. But if you live outside this estate, you can't use them. It's basically exclusive only for the estate owners. Gus, next slide, please. So over here, this is a screenshot from the website. This tells you what facilities you've got in there. Basically, you have an indoor swimming pool, a gym, and a kid splash pad. There was a childcare center, which is right next to it. And yeah, some others. There was another club facility as well. So this is right next to the project. You basically, if you need to, for example, you had friends visiting you, you want to, sit somewhere outside the house for a quick drink, go there. All right. In the summer, you feel like, I want to go swim, go there. If you live outside of the Point Cook, you probably don't have that. All right. So this is one of the main feature of this estate. And all those houses being built will be, so the builder for this project used to be part of the developer. So this developer is quite decent. They've been doing this in Point Cook for about over 10 years. So they're building pretty much the first class townhouses specifically for this developer. And I've walked through a couple of townhouses they're building in the southeast. I'm very impressed. These townhouses I've been into the southeast is about 3 to 4 years old when I'm visiting them. And the quality still look amazing, right? It's well maintained, almost look like a new townhouses. And, given they are building the same townhouse, I believe that it will be the exactly same quality, all right? Gus, next one, please. So this project, they will have a combination of floor plan types. But this is also one of the best things, because In Point Cook, these days, like, you know, what Dana mentioned before, you probably can't, very hard to find something start with 5. All right. If you go house and land, high 6s to 700 or even 1 mil. Right. So start with 5 is something definitely worth looking to. So we have some 2-bedder, 2-bathroom, double-story, single-car garage designs, pricing from nearly 567, 500. And for that, you can get a rent about $500 to $515 per week. There's only a couple of them in the current release. Next option, we have also 2-bedder, 1.5 bathrooms, single car garage, but they are slightly dearer because these ones come with bigger land, right? Because this one, there's only one of them, and it's a long skinny block, bigger land size. And for that, you can get about $500 to $525 per week. The next 3-bedder, there's about 4 or 5 in this release. There are 3 bedrooms, 2 bathrooms, double car garage. They're sitting around mid-6s to 670. For that, you can get about $550 to $575 rent per week. As of last, there are 2 4-bedroom designs in this release. You know, they come with bigger land, more decent, much bigger build. A 4-bedroom, 2.5 bathrooms, double car garage. For these ones, you will be getting $765 to $799. For these ones, you will be getting a rental around $625 to $650. So yeah. So all right. So yeah, that's what I'd like to share today.
Tony, thank you so much. And what I would like to say, guys, the reason we've selected this property as a highlight, we're only highlighting the one property, and now we're going to go on to the rental side. This for me was the standout. So we research every single day. We're looking at properties. So like in Perth, Brisbane, Adelaide, we cannot find anything with a 5 in front of it, let alone a 4, right? So we can get 400 and something thousand in Melbourne, 500 something. For me, these were standout. Point Cook is a bayside. That means oceanside suburb. You think of your own city where you live, and you live in next to the ocean, and you can buy in a suburb next to the ocean, next to the bay, at 500,000. Well, you can't find those, right? What I loved about this estate too, there was only this little parcel of land. As you heard Tony say, the developer has land banked. Everything around it is established. It's not a greenfield estate. It is just lots and lots of land. It's a beautiful little infill, everything established. There's only you could see on the site plan there, there's only a few of them. There's not 50 or 100. They're very, very tight in supply. And right next to it is opposite, you would have seen in that photo, there's a nice park opposite. So you got the park, you got the shops, you got the bayside. We've seen all those beautiful things, the schools, the universities, the hospitals, the train lines. And guys, 20 kilometers from the CBD for 500,000, you know, for me, this it represents fantastic value. And that's why we highlighted. Tony, thank you so much for your words of wisdom there. We really appreciate that. We're going now to our last presenter, and that is Mark Lim. Mark, I'd like you to just open up your video. There he is. Yeah. So Mark, I'd like to introduce Mark. He is the new client relationship manager at Longview Property Management. Mark is a licensed real estate agent with more than 10 years of extensive experience in property management. Works closely with Longview's team for senior property managers. Mark has to date personally helped more than 1,000 clients securing quality tenants while keeping vacancy at below market average. Having experienced firsthand numerous cycles in rental markets, because they go up and down too, including recent massive legislation changes in the tenancy law in Victoria, which we mentioned a bit earlier, Mark is able to offer valuable insights to clients from a property investor's perspective. Longview, the company that Mark represents and works for, is a multi-award-winning property management-focused company. So that's what they focus on, property management, with presence in the Melbourne market and the Brisbane market, and are one of the largest independent operators in Melbourne. And that's what we like about them. They can manage the whole of Metro Melbourne. Longview is the recent recipient of Real Estate Institute of Victoria's Residential Property Management Team of 2024. So that's fantastic, a real fresh current award for them. It is also one of the select few property management companies who can serve the entire Metro Melbourne. Good evening, Mark, and take it away. Thank you.
Good evening, Gav. Thanks for having me. Yeah. Yeah. If I can have next slide, please. Next. Yeah. Guys, thanks for having me. I just want to give you some snapshot of the rental market here in Melbourne. Yeah. As you know, like every other capital cities, rent has been growing quite significantly since COVID. Yeah. But right now, what we have seen is that the rental growth has actually is actually easing. Yeah. So it's just easing, but there's still some growth there, which is 5.6% over the last 12 months from last October. Yeah. Now, to give you a perspective, from COVID till now, on average, we have our growth is about 30%. With the vacancy rate, what we have noticed is that it's slightly lifting from our record low. Right now it's 1.5. At our lowest point, we have been achieving 1.1%. Yeah. Next slide, please, Gav. Now with our Metro Melbourne median weekly rent, we are at $575 per week at the moment. Yeah. And with the median gross rental yield 3.3%. Yeah. And I think from what Tony and Gav shared, at 3.3%, when this is the median, if you can achieve anything higher than that, I think it's a really good return. Yeah. And what we are seeing on the ground at the moment is that right now renters, they are opting for more affordable rentals. Yeah, because of the speed of the increase of rent. Most of them, a lot of people, because of this cost of living pressure, they are really looking for more affordable rent, including moving further out from the CBD, something like 20Ks outside of CBD to get into a good established suburb. And then you have a ready infrastructure, yeah, with a larger piece of land, and then let more land component there, yeah, and you can have at least 3 to 4 bedrooms. Yeah. Next, please, Gav. And now coming to Point Cook, the rental market right now, it's sitting at 1.7%. Yeah. Median asking rent is actually at $560 per week. Yeah. Now, if we look at the long-term market trend, you can see like back in 2014, the median rent it's about $375. Right now, if you are talking about 560, it's considered quite a huge increase there, and that's what you can see from established suburb point of view. The growth is actually quite steady over time. Yeah, it doesn't fluctuate much, but it really looks like the growth is steady. And now rental, it's a kind of it's supply and demand. As long as you have your supply, it's your demand can keep up with supply. There you can see this type of growth trend coming from a suburb like Point Cook. Yeah. And one thing I would like to add to Tony and Gav is that Point Cook on the west side of Melbourne, we have this Westgate Tunnel, which will be completing just next year. Yeah. So it really opens up. It gives a lot of accessibility to suburbs like Point Cook and the Wyndham City as a whole. Hence, it's affordable and easy access. Yeah, those are the things that renters are looking for. Next slide, please. Now with Western Melbourne, west side of the Melbourne, as a whole, vacancy rate is at 2.3%. Yeah. And if you can see like Point Cook, because it's established, it tends to have a lower vacancy rate. Yeah. And the rest are the median asking rent for some of the suburbs that Dana has highlighted earlier. Yeah. Now all these data are all coming from real estate in Institute of Victoria. Yeah. Next, please. Northern suburbs, yeah, we are talking about the suburbs of Mickleham, where Merrifield is, yeah, Craigieburn, Woolert, yeah. So they have quite a low vacancy rate as well, yeah, because like over something like Merrifield, it's a very well planned, estate by itself. When you have a very nice, well-planned suburb with infrastructure in place, renters they tend to go to that sort of suburbs. Yeah. Next, please. And then something about southeastern Melbourne. When we are talking about Pakenham, Clyde North, and Clyde, it's also quite low vacancy there, 1.1%. Next, please, Garth. And this one we can skip. Yeah. So now these are some of the suburbs that it's more established. Yeah. But they are closer to the city. Yeah, the vacancy it tends to be lower as well at 0.9%. Yeah. Next, please, Garth. Reservoir 0.8%. Yeah. Next slide. Yeah, and coming to why right now is the right time to invest in Melbourne. Yeah, as Dana has shared, we have a robust economy there. Yeah. Now, one point is that we have been the one of the world's most livable cities for many years. Yeah, and right now we are coming back. We lost our standing during COVID just because we have the most amount of days being locked down. Yeah. So right now we are slowly getting back there simply because Melbourne has the right mix of job opportunities and the right mix of lifestyle as well. Yeah. So as of this year, we are ranked number 4th. Yeah. And we always have a strong population growth. Yes, Dana has mentioned our population will one day overtake Sydney's, yeah, simply because overseas migration it's the key leading factor that it's bringing people into our economy. ITs, yeah, education, yeah, it's where we are at, yeah. And with rental supply, again, coming back to rental supply and demand, our supply is not really catching up with demand. Yeah, our building pace, it's not as where we want it to be. New dwelling approvals is only at 4,900 as of 2 months ago. On average, we really need about 6,500 a month to achieve our target of 80,000 per year. Yeah. And as Garth has shared, it's a value buying opportunity right now compared to other capital markets. Yeah. So we are ranked 6th among the nine cities. Yeah. So if you look at the other way around, we are actually at the bottom 3. Yeah. Melbourne has never been at the bottom 3 with these baskets of capital cities. Yeah. And one good news as well, last month, Victorian government has just announced these incentives. Yeah. So with reduction of stamp duty for off-the-plan properties for the next 12 months. Yeah. So I think you save tens of thousands just because of just one incentives, simply because we want to attract more investors into our city. Yeah. And to really boost up the building supply. Yeah. Next, please, Garth. And now these are some of the media, yeah, from what I think some of them Garth has shared as well. Yes, Perth has just taken over Melbourne, and this was in 9 years, yeah, whereas Adelaide it's actually in 40 years. Yeah, think about it. In 40 years, Melbourne has always been on top of Adelaide, but right now Adelaide has actually taken over. So a really good sign that it's the clock is there. Yeah. Next, please. Yeah, and now compared to Sydney and Melbourne, yeah, compared to comparing their median price, yeah, right now this Sydney median price far exceeds Melbourne's median price, yeah. So it's actually at the historic extremes, yeah. So hence, a lot of people are telling us this is the right time to get into Melbourne market. Yeah, next please. Yeah, and now this is just a bit of a background of Longview. Longview, we are focused in property management, and we are multi-award winning team, and we serve all the Metro Melbourne 150 suburbs. Yeah, I think that's it for me today. Thanks for having me.
That's brilliant, Mark. Fantastic. Thank you for giving us such a cover of the market there. And I think is it fair to say that when the market was a bit tough, you would have lost some property managements, but you're starting to see that, you know, I was talking to another property manager today in Melbourne, and they reckon in the last 3 months there's been a real surge of investors coming back into the market. So we know our research is accurate, because though it's not on the records, new investors are coming into the market thick and fast. Is that correct?
That is true. That's true. Now we are on the ground, so we are managing about 3,500 properties. Yeah. Now last year itself, we lost quite a lot of managements just because owners are selling. Just because of the new legislation and the land tax as well. Yeah. But right now, what you shared was right, because we are at the point that you have good buying opportunities, and with the government incentives. I think this is the starting point where property is always in cycle. Yeah. So this is just a starting point, and then if you take the opportunity, yeah, next few years will be exciting.
No, that's great. Well, thank you. I'll get all you panelists just to unmute yourself and bring your videos back on. We've got 2 questions, please. We've still got time, guys. So questions, very valuable. First one is from Aram. What are your thoughts on apartments with no land associated with them? Is the market flooded with it, and will it improve? I'm going to go to Dana. So obviously is a small land component, but even those apartments are getting smashed with land, with the land tax. Thoughts on apartments with no value, no limited land value? Is the market flooded, and will it improve?
Look, the market is flooded with apartments, absolutely. Melbourne has, I believe it's about 33% of its overall housing stock is apartments. And that has suffered really badly since the start of COVID in terms of loss of rent, so higher vacancy rates, and sales of those properties have also slowed quite a lot. So there's definitely a lot of apartment stock still available. And because apartments are quite accepted in Melbourne, as opposed to areas like Perth or Adelaide, there are still more apartments coming onto the market, adding to that supply. So is it flooded? Yes. Will it improve? I think that we'll have to see how that plays out, because a lot of the apartments in Melbourne are also rented by foreign students. So that becomes very political. Political thing.
Thanks, Dana. And at Property Powerhouse, we don't research apartments. If a client really wants one, we'll go and find one. But in our experience, my personal investing of 20 years, and a lot of investors in and around me, apartments just are, they're not good for capital growth in Australia. They're great for owner-occupiers and for tenants, because you generally can get closer to the CBDs. But yeah, from a Property Powerhouse perspective, you won't see us recommending or promoting apartments. Townhouses, great. Villas, great. Houses, house and land, fantastic. Question here from Rob.
I just, before you go on to Rob's question, just add to that. Another thing that we don't love about apartments are the high body corporate fees that come along with them. So oftentimes when you buy an apartment off the plan, The proposed fees are quite low, and then once you become an owner in the building, they start to tick up, because the owners of the building are all responsible for maintaining the entire building. Like the cost of elevators is huge. And so from my own personal experience, because I come from New York and I love apartments, owning an apartment here in Australia has always been much lesser cash flow for me and lower capital growth for me in our personal investments than any landed property.
Yeah. And look, what I'd say on the back of that, thanks, Dana, is also, look, not all strata is bad. So some strata you'd see with some townhouses, they've got some strata fees in there, but generally because they will be, if they're townhouses, they're upstairs, downstairs, no lifts. Generally, there's no pools, no barbecue areas. So we try and identify areas where if there is strata, sometimes, you know, that's okay because we're getting close to the CBD. Or in this case, close to the ocean at Saratoga, and you know, we're not paying for lifts and all those expensive things. The other question here was, what is self-managed super fund compliant reference for investment properties? I think Rob's referring to, if you go to the our website and see the stock list on there, what we're referring to there, Rob, is that for self-managed super fund, if you're buying in your self-managed super fund, there have to be a single contract, which means you can't do a construction loan in the sense of progress payments. So through your self-managed super fund, if you are interested in purchasing through that, talk to your finance broker first, and absolutely we can help you find the right property through that. Would be either a brand new complete property or property where you pay 10% down and nothing until completion, but it can't be progress payments, traditional sort of house and land. So I hope that answers that for Rob. Tony, you just a question from you also come through separately here from Jennifer. Yep. Just wanted to know some of the soil types around Melbourne. Is it a bit more expensive to build in the north? Someone, I know when we were there was saying there's a lot of rock in the northern suburbs. What's your experience with the different soil types around, and does it affect the building costs?
Yeah. For that will typically, so just that you have two scenarios, all right? When you're building townhouses, when you're building one part contract like the Saratoga or any other one part contract stock, that factor is totally eliminated because vendor or the land developer deal with builder directly to factor everything. So when that was sold, contract signed, that you don't, the purchaser don't need to consider that at all. That's one side of it. The other side, if you choose to build a house on land, typically in Victoria, if you go to any retail builders display home like Metricon, Siemens, you know, if you go to the display home, what they typically do will give you, you know, this is allowance for site cost. And then once you put the deposit down, then they do the soil test. And if the soil test come back with, let's say P class, P stands for problematic, all right? If it come back with a P class, then they will charge you more for it. Because if it is P class, you need to do piers, sometimes screw piles, reinforced slabs, things like that. There's all sorts of things they need to add on. So which is very, it's I wouldn't say it's risky, but it's hard to control. It's sometimes can go out of control, right? And typically in Melbourne, the best soil type you can find is probably in the southeast. And in the west, typically will be the H class. So H class is sort of the medium low level, which is most builder is more, it's quite comfortable to build on it. So that's called H class. In the north, sometimes you can, it depends which pocket of north, right? Most likely you'll get an H class soil, but sometimes if you hit rocks, like big ones, that automatically convert to a P class because you need to break the rocks underground, dig them out, and remove them to somewhere else. So there's, you know, all sorts of things needs to be done to tackle that. So in answer your question, when you're buying a house and land, yes, that's a very important factor for the site cost or your final price. But buying townhouses, that doesn't affect you at all.
That's great. And that's why we have Dana for you guys. Dana will negotiate fixed price contracts to take away all those potential headaches. So it's fixed price. If they find rock or not, that's not your problem. There will be fixed prices there. We've got 2 questions. I know we're a little bit over time, so please hang in there, guys. What's our opinion on Werribee suburb? So Werribee is in I was going to say, it's on the southwest side, just there behind Point Cook. I'm going to answer that, and I'm going to go to Mark from a rental perspective. I had a property in Werribee and did fantastic for me. Bought it at $250,000, renting at $250 a week. It's just back from the ocean. It's on the corridor between the train line between Geelong and Melbourne. I think it's great. There's a lot of infrastructure going in there. I think there's a massive new university going in there. So talk to us, Mark, about rentals in Werribee. Is it a in-demand place to rent, and why?
It is. Yeah. Now simply because I come back to the affordability. Yeah. Now the stock over there right now, it's more below somewhere between below 550. Yeah. So which is considered quite affordable. So you will see young families starting up over there, and then you can see young people sharing as well. Yeah. And also with its distance, somewhere in between Geelong and CBD, like you will find that people slowly moving closer to this Werribee site. Also because with the metro train station, it really attracts people to rent over that area. Yeah.
Fantastic. Last question, because I know we're over time. Quick answer from you, Tony. Can we elaborate more on the Saratoga townhouses that you specialize? Is this a 90-10? So the answer is yes, it's a 10% deposit, nothing 90%. Else until completed. I see it's a plan. There's 2 stages. When will stage 1 and stage 2 be completed? So they literally could go ahead today, put a 10% deposit, nothing else due, fixed price contract. Completion, when would we be expecting stage 1 and 2 to be completed?
Okay, so at the moment, the land is vacant. All the the vendor just need sort of I think it's already meeting the requirement. So as of right now, expecting stage 1 to be completed by February 2026. Okay. And stage 2, I probably mentioned to you guys earlier, it's being released a couple of days ago. We're just waiting for the marketing material. These ones will be pretty much constructed at the same time, but I know the builders on site, they will be, although they are on the same site, they're gonna start the stage 1 earlier, because they want to make sure the tradies have enough job to work on for the couple of months. Once they've done that, same tradie will move to stage 2. So stage 1 will be basically 1 month ahead of stage 2, but both stages are expecting, say, January, February, or March of 2026. And here's the trick, because as what Dinah mentioned before, we're on the sort of just about to be moving out from the bottom of the market, 6 o'clock. Secure something right now in such an established suburb, right, and at such an affordable price. By the time the house was completed, my feeling is will be sort of more close to 9 o'clock or 10 o'clock. This is my sort of assumption. By the time it's completed, it's there. And the rental will go up. You have a perfect property right next to everything. To me, it's a no-brainer. Right.
Thanks, Tony. And that's what I like about it too, guys. The important thing, fixed price. So you're buying into a rising market, you fix the price on a 10% deposit. Our guys have smashed it here in Perth, and we've got people that have made, in the Perth market, they've made 200 grand in the last year. And we've had clients literally 8 months, they put in an expression of interest, and 8 months later, the properties, and these are in Westminster, we had 3 of them. They bought at 540, and by the time they were finished 8 months later, they were valued at 680. So there's great opportunities with these 90-10s. Put down your 10% deposit in a rising market. You get the equity, and these opportunities are going to be swallowed up really quickly. And as we said, it's restricted. There's only, how many on both stages, mate? Is it like 20?
About 23 in total, 23, 24 in total.
Fantastic. Right. When there's 23, when they're gone, they're gone. And that whole site is it's an infill site, which means all around it is established. But look, we're going to call it time there because we've gone a few minutes over. There will be a recording coming out. I will get the recording off to you tonight. So please, and I will have the contact details. I'll put the contact details of our presenters on there. And hopefully it's been really educational for you. It's an exciting market. And we're glad that we're working with great experts like Mark and Tony and Dana and the team. So thank you very much to our guest speakers again. Thank you, Mark. Thank you, Tony. Thank you, Dana.
Pleasure.
And I hope you as our audience have picked up some good information. Call to action. Go and speak to your understand what your purchasing capacity is and come and have a chat to us. Again, we're Australia-wide. If you don't feel comfortable in Melbourne or you want to buy in your own city or your own state, first of all, we've got great opportunities. Even though Perth's 11 o'clock on the property clock, there's still some gold in that market. The same with Adelaide, same with Brisbane. If you want to buy in those markets, we still have a few golden nuggets in there, which we're still happy to market and promote and recommend to you. So just winding up, thank you very much again. It's been our pleasure with you. Thank you.
Thank you.
Thank you, guys.
Thank you.
Yeah.